When you buy a home, you have several choices when it comes to financing. Should you go with conventional financing or FHA? If you're a veteran, what about VA? Another decision you'll need to make is the length of financing. Should you go with a 30-year loan or a 15-year mortgage? That's the subject of today's video, and we're going to get started right now. Hi, my name is David Matney with Nebraska Realty. I'm a local realtor here in Omaha, Nebraska. Now let's jump into today's topic. Disclaimer, I'm not a financial advisor. These are just a few tips that I have employed over the past few years. Should you get a 30-year mortgage or a 15-year mortgage? How much money will you save with a 15-year mortgage? Let's take a look at the math. In the Omaha market, the median sale price in our market is right around that $300,000 price point. We're going to keep things simple, and with our math, we're going to say we're buying a house for $300,000 and we're using conventional financing with a 20% down payment. Keep in mind, there are a lot of different loan programs out there where you don't have to come in with 20% down payment. The advantage of a 20% down payment is that you avoid mortgage insurance when you have a down payment of 20% or higher. Okay, let's look at the math. Purchase price of $300,000. You have a 20% down payment of $60,000. The amount you're financing is $240,000. Your monthly payment at a 7% interest rate for 30 years is $1,596.73, and that's principal and interest only. And if you take that out to the life of the loan, that's 360 payments, which equals $574,822.80. What does the math look like on a 15-year mortgage? Okay, you come in with a purchase price of $300,000, a 20% down payment of $60,000. The amount you're financing is $240,000. Your monthly payment at a 7% interest rate for 15 years is $2,157.19, and that's principal and interest only. Now, you take that out over the lifespan of the loan, which equals 180 payments, is $388,294.20. So with a 15-year mortgage, you're saving $186,528.60 in interest payments. Remember, depending on your loan amount and your debt-to-income ratio, you may not be able to do a 15-year note. Just a reminder of what a DTI is. It's your monthly debt divided by your monthly income. I did a video on your debt-to-income ratio, and I'll leave a link in the card above. Many loans have limits in place for your loan program. This is to prevent you from being house poor, meaning all of your monthly income is going towards your house payment. The nice thing about a 15-year note is that you pay off your home faster. However, there's a few things you need to be aware of, and some of this is just kind of common sense. Number one, you want to make sure that you have an emergency fund first. Have funds set aside so when life happens, you don't lose your home in foreclosure. This should be at least a minimum of 3 months of living expenses. Number two, this kind of goes along with it, and that is when you have a loan, there's a clause in that loan called an acceleration clause. This means that if you fall behind in your payments, the bank can call the entire amount due. If you can't pay that entire amount, then the bank can foreclose. And just so you know, if you're relocating to Nebraska, Nebraska is a deed of trust state. This means the foreclosure process is a much faster process. Some states, it can take a while for the bank to complete the foreclosure process. Not in Nebraska. Long story short, pay your payment when it's due. Another bonus of a 15-year note is that you will save money by having a 15-year mortgage because the interest rate on a 15-year note are typically lower. For example, according to Mortgage News Daily at the time of this recording, the 30-year fixed rate mortgage was 7.04%, while on a 15-year mortgage, it is 6.45%. So with a 15-year mortgage, you're going to have a lower interest rate. One of the hacks that I've used in the past with my own mortgage is that I would have a 30-year mortgage, but I would treat it like it was a 15-year payment. okay, and not have that extra applied to principal. That way, let's say you have a month where something happens, you need to repair your car or something of that nature, you can go back and just make your normal mortgage payment and then maybe use that extra amount that you would have applied to the principal toward your car repair. And this is just another hack that I would use, and that would be I would always round up my payment and apply that extra amount towards principal. Let's say my principal and interest payment was $2,157.19. Well, I would pay $2,200 and I would apply that extra amount towards principal. And it's amazing to know how that little bit extra will add up over time. I know there's an argument out there about not paying off properties. I understand that. I just like the thought of being debt free myself. But when you do pay off your mortgage, you're already used to that $2,200 a month payment. Keep making that payment, only pay yourself $2,200 and maybe put that in a indexed fund that tracks the S&P 500. That way, over time, that's just going to compound that savings. Let's say you're one of those folks that, let's say you buy a home a couple years ago and you do have a 2.5% interest rate. Those rates and that money is so cheap. And this is just me, but I would just make your normal payment. Okay. And I would take that extra that you would have applied to principal and instead invest that towards an index fund. Here's another thing too. Let's say you have a home with a really, really low interest rate and you do want to upgrade to another property. I would really seriously consider keeping that property as a rental instead of selling it. Okay. Rents track with the market. Okay. You might have a very low payment and you might be able to charge a market rent where you're making a decent profit. So you might want to consider that and talk to your lender before you just decide to, hey, sell that property. And finally, this is just one more tip out there, and that is you want to always make sure you take care of your credit. The better your credit, the more options you have and more choices you can make. And if you want to learn more about property taxes, be sure to watch this next video and you make it a great day.